Hello, everyone, and welcome to our discussion today on the rise of stablecoins in Europe. My name is Conrad Kraft, and I am Strategic Advisor at the Digital Euro Association. And today I am pleased to have experts in the stablecoin industry to join me today to share their insights on essentially the growing interest around stablecoins, not just across the globe, but specifically also in Europe. Um, Before we get kicked off, maybe just a little bit of housekeeping. Um, I'd like to thank our supporting members who make everything possible and without whom most of this wouldn't be possible. So what we would like to do is extend a warm thank you to all of our standard members who are now on your screen. And without further ado, I'd like us to maybe just take a jump in to our panel today, where we will be discussing, of course, stablecoins, and I will give each of our panelists a chance to introduce themselves and maybe just give us a brief background of what they're working on before we dive into the real meat of the topic. You can follow the Digital Euro Association on X, LinkedIn, and YouTube for the latest insights on digital currencies and other expert insights. And also be sure to check out our Digital Euro conference, which is taking place next year in March, where we will have some of our other experts, including those on the panel here today, sharing more of the developments between now, within the stablecoin and other digital money space between now and March. Be sure to also have a look at submitting your questions on YouTube itself within the chat, because we will have a time a bit after this to answer some of your questions and pose them to our panelists. And this is a great opportunity to have, hear from the horse's mouth, so to speak, on these topics. With a market cap of around 200 billion and various major jurisdictions developing a definitive regulation around stablecoins, these digital assets have really risen to prominence and captured the interest of actors across the globe. We've heard of talk of notable parties such as Wyoming looking to issue their own stablecoin, but also the Trump family office looking to get into that. And we've also seen some major acquisitions like Stripe's acquisition of Bridge recently, which was in excess of $1 billion. So the stablecoin topic is one that's very hot right now. And I think this is an opportune time for us to have a discussion and just to see where the world is going to with regards to stablecoins. With that said, I'd like to maybe just give each of our panelists some time to introduce themselves, perhaps starting with Allan. If you could maybe just give us a background of what you're working on and who you are, and then we'll switch over to Vid and then Patrick. Over to you, Allan.
Sure. Thank you. So thank you for having me here today. We're looking forward to have this discussion. So my name is Allan Pederson. I am the CEO for Eurodollar, and we are issuing a stablecoin under MiCA in Europe, and also a Europe-focused tokenization platform. That's our business. My background was at TradFi, primarily private equity in Asia for financial services over many years, and then a number of ventures in insurance and other types of financial services. I started with getting into stablecoins, working with MakerDAO 4 years ago or so, and worked with them particularly on helping them get into real world assets, investing in US treasuries and working with BlackRock and so on, and have over the past 2 years, I think, focused mainly on the stablecoin business of doing something in Europe and asset tokenization here.
Great. Thanks, Allan. And maybe over to you, Vid.
Thank you, Conrad. So hi, everybody. It's a pleasure to be here. My name is Vid. I today represent Raiffeisen Bank International. We are a mid-sized European bank servicing our clients here in Austria, but also in the CEE countries. And here in head office in Vienna, we have a team dealing with blockchain. We've started a couple of years ago, also done some pilots, especially also on the stablecoin side. So we issued 2 stablecoins even before MiCA. Used them. One was an internal stablecoin. The other one was used to test the cross-border payments. And recently, or last year actually, we also joined a consortium of banks that is exploring the issuance of a euro stablecoin. And this is something that's been keeping me busy for the last year and a half, I would say. Just maybe a short disclaimer also that the views that I share today are of my own and do not necessarily represent the views of RBI. And I'm looking forward to our discussion today.
Great. Patrick, over to you.
Thanks, Konrad. Great being with all of you, and congrats to the Digital Euro Association for all the great work it has been doing. I'm Patrick. I'm Circle's Director for EU Strategy and Policy. Circle, for those who don't know, is a global financial technology company, mostly known for being the issuer of USDC and EURC, 2 so-called stablecoins, one US dollar denominated, the other euro denominated. And Circle is generally seen as the largest issuer of regulated stablecoins out there. USDC is the 2nd largest stablecoin by market cap. And for me individually, I'm mostly leading the work over here in the EU, where I've been leading our regulatory strategy when it came to expanding to the European market. We are very proud that since July, we have been the first and also the, as of today, only major global stablecoin issuer to have achieved MiCA compliance. So we have received an e-money license in France, and we're now issuing both EURC and USDC also as MiCA compliant e-money tokens here in the EU. That's, what I spent most of my time with and what I continue to, what I'm looking forward to continue doing in the future. And yeah, looking forward to chatting about all things Euro stablecoins and stablecoins in general with you.
Great. Thank you so much, Patrick. And, on that topic, in fact, maybe let's just jump straight into the meat of the discussion. Of course, we are focused on European-based stablecoins and obviously being the Digital Euro Association. And recently we issued a paper on the impact of MiCA on stablecoins. And with that, perhaps we could just open a round of questions quickly to everybody. With MiCA being partially enacted now and with full enactment taking place at the beginning of next year, with this clearer regulatory framework for digital assets in Europe, have any of you observed any noticeable increase in the adoption or usage of stablecoins? And how has this potentially, this clarity impacted the interest and engagement from consumers and businesses in the stablecoin space? If I could maybe go to Patrick on this one.
For sure, yeah. I mean, it's still early days, so I want to be cautious and not be, too optimistic too early. But generally speaking, we have seen an increase in interest in our euro-denominated stablecoin, for example. It stands now at roughly 90 million of market cap, which is comparatively small if you compare it to the largest dollar stablecoins. But if you look at it individually, it has been growing roughly 100%, so doubling in circulation over the last couple of months. So we just started issuing it as a MiCA compliant e-money token out of the French entity in July. We had then a very successful launch of that EURC token on the base blockchain. And so we have added at least 40-50 million to that market cap. And also in discussions with partners, be it institutions, be it crypto capital market partners like exchanges, or be it payment service providers in the union, it is very clear that their perspective on those assets, on those tokens, have now changed. And they clearly see them as an integral part, regulated part of the payments landscape and of the financial landscape, and are now way less hesitant to integrate those tokens into their services. So hopefully, as mentioned, it's still early days, but hopefully if this growth continues, I'm personally very bullish that we will see, Euro stablecoins in general doubling, tripling, etc. in size and circulation over the next couple of years.
I think that's quite encouraging to see that investor confidence and industry confidence that MiCA has provided. Maybe any notable increases that you guys have seen, Vid and Allan? Maybe just one or two tidbits that you might have noticed.
So
I mean,
maybe go ahead, Allan.
No, please.
Okay, so in terms of adoption, I here agree with Patrick that we are still in the early days, especially when it comes to the market cap or the number of transactions or the volumes of transactions. But how we also, let's say, measure adoption, or where we see the certain factors are pointing towards adoption, are definitely the use cases that are going beyond crypto trading. And here we've seen on the US market or on the US stablecoin market that, for example, Visa has been using a stablecoin to settle merchant transactions. Now, recently, we've also seen the SAP is building their platform for cross-border payments for their corporate clients. And these are definitely interesting use cases that are also coming closer to the payments that we currently, or to the payment services that we currently provide. Some other PSPs are also exploring stablecoins or using stablecoins. And one of the use cases that's very interesting for me is also settlement of tokenized assets. And here we also have to say that we don't see that the volumes of tokenized assets are at the level where in comparison to the traditional assets. But this is definitely something when we have more tokenized assets, we will also need, there will be a bigger need for cash-like on blockchain. So maybe just to emphasize also some other factors here, we see that now with the announcement of MiCA, we also see more stablecoin issuers appearing. So Revolut announcing that they want to issue stablecoin. Banking Circle, BBVA just recently announced that they are also exploring this. And as you mentioned, there are also certain acquisitions. So on the US side, Stripe acquired Bridge, but here in Europe, we also saw the recent example of Paxos acquiring Membrane Finance, and also Tether, for example, investing in Quantus Payments. So I would say that maybe just from the numbers, we cannot see the adoption or the critical mass for the adoption is there yet. However, many other factors are pointing in this direction that the future for Euro stablecoins is bright.
Great points, Allan. I think so. I mean, I echo what's been said. I think I can just only speak from our experience where we focused a lot on the asset tokenization angle, and what we can see there is that the parties or the asset managers and the like has gone from talking and proof of concept to becoming a lot more concrete about, well, now we want to do this for real. These are for real things we want to do. And then instead of talking necessarily only about your stablecoin technology, even going back to talking about things like, okay, but that's fine. I know for sure you can bring liquidity in it, know for sure that you can get the technology working and so on. But what is the market fit for these particular tokens that we're now putting out? So that tells you how far a lot of them have gone, because it's like we're no longer is it an experiment with technology or an experiment with this? It's like, are we doing this for the purpose of addressing a new market or creating efficiency? What's happening here? Tell us where we are. So I think honestly, the safety or the sort of comfort saying, okay, it is now settled. There is a thing called stablecoin. There are different versions of them with different regulatory schemes. MiCA is a pretty solid one, and there's a lot of people who've taken on, as everybody here said, that there are many issuing it right now. So it's getting a good common format. It's getting a presence that people will get to know and understand its stability behind it. So that's really good. And the world, or those who's going to use it, the primary participant to this, at least in the asset tokenization part, have moved on. It's like, yep, that's it. Now so let's get it on. Let's get it going. So it's become a lot more lot more practical now, as in to roll things out and do it. So yeah, it's been a very positive thing to get it out. I may disagree with parts of the MiCA, but overall very positive. Yeah.
Okay, great. Good to hear from the industry that there's a general positive sentiment, with room for improvements, of course, and looking forward to gradual adoption as people become familiar and comfortable with the regulation itself. Maybe going to Patrick, of course, being one of the first, or if not the first, stablecoin issuer to achieve compliance or license under MiCA, would you be able to share some insights into the licensing process, including some of the challenges you faced and the lessons learned, perhaps? And maybe just if you could spend 30 seconds also on top of that, just giving us some clarity around the issuance under the French issuer, just so that there's some clarity around what that's all about.
Happy to, and just one very brief clarification. So we're not the first issuer in general to have achieved that compliance. There are other, European stablecoin issuers that have done that before us. I always say we're the first major global issuer. If you look at, for example, the market cap and you scroll down the top 50, for example, that's where we have been, as of today, the first and the only one. So also props to all the other companies out there that have done the work. On the EMI license itself, maybe the first lesson learned or the first advice that I would give to everyone is to start early. This is really not a trivial process. Everyone that has gone through an electronic money license application knows how comprehensive that is. So you have to obviously do the operational work of setting up the entity, of hiring the people on the ground that are necessary to run that entity. But apart from that, there's all the necessary then compliance and governance steps that you have to take, from governance within the company to risk management to prudential setup and requirements that you have to comply with. And it's not only MiCA that you have to navigate. MiCA is just one piece of the puzzle, right? You have to essentially set up an e-money institution following the e-money directive under EU rules, and then also comply with all the other, like the big plethora of EU rules with respect to anti-money laundering, and then taxes and reporting obligations and cybersecurity rules under DORA, etc., etc. So this is really a complex setup, a complex feat. And for us, I would say one thing that was particularly complex for us is that on top of the EURC, the Euro stablecoin that is now 100% exclusively issued out of that French entity, we also have USDC as a global token, right? And that is primarily a US dollar denominated stablecoin that is also issued from our American US entity. And so we had to navigate MiCA and find a model where now, in addition to the US issuance, we have the same fungible token being issued in the EU out of that French regulated entity. And so we had to go through, I would say, months and months of discussions with the EU level, with the French level, to find a suitable setup for that token. So maybe that, in short, what it took to get to that point, to get the license and to get to issuing those. And with respect to your last question on EURC, in general, what I can say and what is important to highlight is that, as mentioned earlier, EURC is a euro-denominated e-money token. It is exclusively issued as of today out of that French regulated e-money institution. It is 100% reserved by reserves that are MiCA compliant, safeguarded by European banks, in accordance with those EU rules. So it is, in that sense, it has become an entirely European product. I joined Circle over 2 years ago when EuroC was just launched. I was actually one of the first holders of that token. And it was always clear from that date, we want to onshore that issuance and that product to the EU. That's also part of why I joined and why that mission was so exciting. And now we really achieved that. And so we're super proud. and we're looking forward to growing URC alongside all our global and European partners.
Great. Thanks for that clarity. And of course, like you say, start early. The early issuer gets the license, I guess. Very important. Maybe moving over to commercial banks now. Vid, from your perspective, with the issuance, with the enactment of, or the partial enactment of MiCA, how has Raiffeisen Bank and maybe the commercial banking industry, if you know it all, what role do you foresee for traditional banks in the evolving stablecoin ecosystem?
Yeah, so as you can imagine, the payments are a big part of the banking business and also of our business. And here we have to know that payments are highly dependent on intermediaries, especially when we're talking about cross-border payments. So peer-to-peer transactions are something very new for us. And also when I'm talking to my colleagues, it's hard to imagine that payments can be done peer-to-peer without involvement of any banks. So definitely we see that there is disruptive potential in stablecoin. However, even if payments can be done peer-to-peer, this doesn't mean that banks are completely out of the game. So one of the potential roles for the banks here would be to issue a stablecoin, and this is something that is now possible with the introduction of MiCA. And this is also something that we're currently exploring with the other banks in this consortium, where we're exploring the issuance of a euro stablecoin. But let's also not forget that, especially for corporate and institutional clients, there will have to be a custodian that safekeeps these assets. I do not believe that, especially when it comes to corporate and institutional clients, they will be using non-custodial wallets. Of course, this is technically possible, but from a business perspective and also from a risk perspective, this is not something that they would probably do, at least not in short to mid-term. So here, banks could also position themselves as being this custodian, the trusted party. We're now custodying other assets for them. Why not also to custody the digital assets, including stablecoins for them? So here in RBI, we're also thinking and also making our first steps towards building the digital asset infrastructure that can later on also accommodate stablecoins there. So I guess what I'm saying, stablecoins have disruptive potential for banks, but this doesn't mean that banks will be out of business when it comes to payments. I just believe that the roles here will shift.
Okay, so interesting to see that banks are not resting on their laurels and, of course, actively competing in this space with the challenges. Maybe to Allan, speaking of challenges, I mean, from as a potential new entrant to the stablecoin arena, how do you feel, how has MiCA impacted your path to development and adoption, or what do you see the market in terms of adopting euro-pegged stablecoins or others in Europe?
I think at first I just want to add to Patrick, who's gone through this EMI process, which is obviously the same process that we've gone through. I can only say, same pain and it's a non-standard application. That's all I can say for people who want to try it. It will be something that the regulator has done for the first time usually, and the technology and what's going on is going to be a learning experience for all parties involved, and that makes the period of time can make it quite lengthy with a lot of engagement. So I would just say that if anybody has a intention of trying, and then I would also say it's important to understand that whilst the EU, you think of EU as that's the market. When you associate yourself with a particular regulator within this particular market, the intention is for you to build your operation in that particular market. There is not like and then, I just choose this regulator because I like it, and then I'll place myself in, somewhere else. the key part is to associate with the regulator in the particular geography that you intend to spend most time in and have most business with. So Patrick, I believe that's France, and in our case, it's Denmark. So we're very much building our operation in Denmark. So just please don't anybody thinking about it think that this is not a serious choice, and that you will need to commit to that particular part of the equation. If you say that you want to do things in the Netherlands, you're going to have to do things in the Netherlands. So yeah, that's just a key thing I wanted to add. And yeah, it's at this current moment, it's a non-standard application process. So there are pieces that will take time, and there's a lot of education going on. Now that being said, that for as you go through it and as you start talking to customers in the other end, when you start at some point seeing the light in the tunnel, saying, well, apparently we are going to get to the other side and get issue something. I will say the MiCA has been instrumental in a lot of things, right? As we've discussed earlier here, Patrick and Vid, the fact that it is now a recognized instrument, right? There is a law about it. There is how to do things. That's a big deal. It's not just, I think this is a stable coin. It'll be stable. You just use it. Remember, I previously worked a lot with MakerDAO, where some of this is it is a unregulated stablecoin per se, right? It just came to fruition or came to be with a lot of great decision making, but there was no sort of regulatory backing for it. It just was a really good design, really good design. So the fact that we have this has been very helpful, I think, for us to move forward. And in my view, so a lot of people be thinking about things like first move or second move, or all these sorts of things. I think it's a good, because you can see there's a lot of things happening right now. You can see the one in the Netherlands. Tether is part of that now, I think. Monerium, one of the first ones I think that ever came out from Iceland. The guys in Finland who was purchased by, or at least invested in by Paxos, I think, or something. I mean, and at the same time, we also hear about many other people setting something up different places. I think that's what we'll have to see over time. And I don't think that's a bad thing. I think that constitutes or makes this particular scheme, this regulation, more and more well known by more and more people as an acceptable way of saying, okay, well, this is the standard for stablecoins. That's fine. Everybody approves of it. So I think MiCA has been good. I think it's even better that so many people are adopting it, because it helps everybody. Because at the end of the day, the market is small. When it comes down to it, 200 billion or whatever you say, it's a lot of money, but in the grand scheme of liquidity in TradFi, it's terribly small, right? So if you talk about general liquidity or money markets or whatever money in TradFi, we're in many trillions. So obviously, this is an infant market, and it's not going to be one or two or three who's going to grab all that. We're going to have to, all those who are here, trying to build up to it. And I think MiCA has built a great foundation with so many adopting it, getting everybody to know about it, and now having that as a good standard to stand from. But yeah, I'm very positive on this path.
Well, it's good to hear that the new entrants are positive. It may indicate that the regulators did something right, but maybe not perfect, right, Allan? Maybe just moving over to looking at the integration of stablecoins now that they've been embraced and regulated, so to speak. With Euro or EURC rather, how do you see this being utilized by the market so far? Which sections or which sectors of the economy, or what applications do you believe will see the most adoption for this and other stable coins within Europe?
So the reality is, today, the majority of the usage still happens in crypto markets, I would say. So both centralized and decentralized crypto markets. centralized markets, you have all the exchanges, and that's where, EURC is widely listed and accessible across, all the major European exchanges like Coinbase and Bitpanda and many others. And there, I think the objective is to grow the liquidity and to make that offering competitive with other stablecoin pairs, right? Because liquidity inherently begets more liquidity, and the network effects of those liquid trading pairs are quite powerful. So the question is, how can we boost those euro pairs to make sure there is enough liquidity that makes that trading offering competitive on the centralized markets? On the DeFi side, something that is very exciting that we have seen coming up recently with the launch on the base blockchain for EURC is the creation of USDC EURC FX pools. So on-chain FX pools, they can be used by anyone, be it retail or institutional, and that are perfectly transparent, that settle in a matter of seconds with less counterparty risk, and that cost, generally speaking, a fraction of the FX costs in traditional markets. So I always urge anyone to check out those on-chain FX markets. We're at the early days for sure, but I'm personally super excited about that. So that's where I would say the majority of the usage still happens today. But if we look further into the future, and that's one thing that MiCA tries to enable and to accelerate, is the integration of those new financial instruments, e-money tokens, into traditional finance.
I think we've lost Patrick there for a second. The integration into...
Me, Conrad?
I think we just lost you for a second there as you were talking about the integration into... Oh,
okay. Yeah, I'm sorry. I think I just froze. So within traditional finance, I'm mostly excited about two use cases. One is the integration into cross-border payments. There's huge remittance channels and cross-border B2B payments channels between the EU and other countries that use the euro today that also leverage traditional FX markets. And I believe those cross-border payment markets are still comparatively slow, comparatively expensive, and just ripe for disruption. So that's something we're trying to push with partners. And then the second use case is the slowly but surely happening tokenization of capital markets out there. We have seen with the EU DLT pilot regimes, the first trading venues being launched for tokenized stocks and bonds. And those venues need a tokenized fiat settlement leg, right? And especially here in the Eurozone, they will naturally use a euro-denominated tokenized settlement leg. And so that's where we're trying to push EURC to be used when it comes to buying and settling a tokenized security, a tokenized Apple stock, or a tokenized whatever, BMW bond. This is something that I personally expect to see happening in 2025 with multiple trading venues being launched and more traditional asset managers tokenizing those instruments. So yeah, these are the areas right now that I'm the most bullish on.
Great. Interesting to hear. And of course, the use cases are likely to increase as the market becomes more comfortable and the use cases flourish. I mean, even IoT, for instance, being a potential in the future. Maybe turning to the commercial banks, Vid, from your perspective, what potential do you see for stablecoins in the offering of commercial banks within Europe? And maybe if you could also talk to, because MiCA obviously closely integrates commercial banks within for stablecoin issuers, of course. What are the commercial banks' preparedness for servicing crypto asset service providers within Europe? Have you guys done anything, and what do you know about that?
Yeah, so maybe just a couple of words on the use cases. I can fully agree with Patrick. I think there are certain areas where stablecoins can really have this disruptive potential. On one side, when we're talking about retail payments, especially here in Europe, we don't see a market failure. So retail payment market is working well, it's efficient, it's fast, it's cheap. But when we're talking about cross-border, there we often come to these discussions that the cross-border payments are expensive, not transparent, also slow. So this is definitely something, use case or an area for use cases where we see the potential. Maybe just one remark here. When I was analyzing these cross-border payments also with my colleagues, we saw that often the costs of these cross-border transactions are not the same as the price for this cross-border transaction. So what it costs for the bank or another payment service provider to actually transfer the money somewhere else is often way lower than the price that these parties are charging. So there are also certain margins here in between, which also indicates that this might be a potential field for disruption. Coming to your second question and on the preparedness of banks also servicing CASPs, here we see that now with the introduction of MiCA, this is definitely easier. So now these CASPs have certain regulatory stamp of approval. They are fully licensed. They have to have the risk management in place, and this is definitely something where we see that more and more banks will probably move there. Here we're talking about basic services, so about bank account cash management services. So not, let's say, touching cryptocurrencies if we're talking about a CASP that is an exchange. And we also see that there's a big business potential here. Just for example, there are already big crypto exchanges here that now had to have accounts with the banks that are maybe not tier 1 banks. And there are also exchanges, crypto exchanges that are coming now to Europe and taking advantage of this new regulatory regime and settling here, basing their headquarters here. So based on their size and based on the volume of the transactions that they do, I think that we all see that there is a business opportunity here. So in my opinion, in next year, we will see more and more partnerships between CASPs and banks. So banks starting to service these entities that are now fully regulated.
Great, interesting to see how the regulation has, almost garnered new business for commercial banks, so to speak. And as a new entrant, speaking of new entrants, with Allan, how are you as a new entrant positioning yourself to collaborate with financial institutions of various sorts and regulators to promote the adoption of stablecoins, in particular your own, and what gaps do you see in that regard?
So it's a good question. As a starting new stablecoin, if you like, in your sort of gotta pick your battles a little bit and see where you want to work with. We see a lot of oomph in particularly the capital markets tokenization. We think that's one of the places where Europe is really going to make a big difference, because a lot of the schemes and applications and so on are quite complete, so you can work with it. So that's been our focus area. The cross-border payments is more of a very global business. So there's a lot of global players who is there. But if you focus pretty squarely and saying, well, we're going to play this in the sandbox that's called the EU, and everything that's happening here is really EU compliant, then everything starts fitting together. It's when you do things across that starts, it's like I'm a EU this and that, and now I'm issuing something here in another country, and then suddenly something starts disconnecting, particularly in fast-moving regulations. So we've been very clear about the sandbox to play in. And at this stage of the game, if you like, there is actually a fairly large TradFi component in even doing that. So whilst you're providing liquidity for clearing or settlement of on-chain RWA tokens, Well, the reality is for that to really happen on a T0 basis, you're going to have to do some magic in the background between bank accounts and other types of banking instruments that you need to use to make sure that both parties are settled in the right way. Remember, MiCA is quite hard on the stablecoin in terms of it. You can't issue something if you don't have a dollar in the bank, if you like. So it's quite, you can't do much before that really hits the account. So creating those T1 type of clearance of RWA tokens, which is of course where we want to get to and working hard on getting to with a number of asset managers. Yeah, that requires actually some magic in the back end. And I think if I think about the challenges we've had over the past years, thinking through this to come up with good solutions, and having asset managers on the other side who's willing to work with this and thinks this is something to do, that was hard enough. But then also getting the TradFi layer to work, particularly the banking layer, has moved a lot slower than the regulation has. If I go back 3 years and think about the hardship I had to back DAI with US treasuries from a bank in Europe, and then today to say we've got a EMI license, we want to issue a MiCA regulated, we've got all the things that are necessary. Dear bank, can you please bank with us and go forward? It hasn't moved that much, honestly. It hasn't moved. I mean, the still a lot of the banks are still quite uncomfortable with anything that has a token in the other end, be that regulated or deregulated or nothing. So I think the banking sector, in terms of being comfortable providing some layer, wholesale banking layer, really, that's what we're talking about, to some of those that are coming up here, be that cash VAS, EMIs, I'm sure other things are coming up. That's going to take some time. That's okay, but it's definitely one of the challenges to overcome that you have to go through. But yeah, I will say please, Patrick.
No, I totally agree with you, Alan. I just wanted to take the opportunity because we often criticize the EU, and sometimes rightly so, for over-regulating, right? But when it comes to accessing bank accounts and opening up those opportunities for EMIs and other non-bank financial entities, that's something where we have seen, and I think many others, how EU regulation really pushed that forward. I mean, it's been in the first iterations of the Payment Services Directive already that the EU Commission and others tried to strengthen those PSPs access to bank accounts. In the instant payment regulation now, since a couple of months, payment service providers can access central bank settlement systems directly, right? The ECB has updated its access policy in that respect. So that's a great news, obviously, for all those PSPs and EMIs, including stablecoin issuers. If you look at current discussions, the current review of the Payment Service Directive within the EU, the Commission wants to go even further and allow those EMIs and PSP to even safeguard customer funds with central banks instead of relying only on private bank partners. So that's something where you need to give kudos where kudos are due, and that's something where I feel like European regulation has really been propelling the space forward and fostering competition, innovation in the fields of payments, especially if you compare it to other regions of the world, right? Without necessarily naming any countries here, but access to banking has been easier in the EU.
Sure. Great.
Yeah, I mean, just from my perspective, it's always so fascinating to see how stablecoins have moved from being a crypto hedge or place to park profits for crypto traders, essentially, and now they're becoming fully legitimized, and the use cases are really proliferating throughout the traditional financial markets. It's really a sight to behold, I would say. And of course, like you mentioned, the regulators are doing quite a lot in terms of making sure that these are legitimate and that the innovation can foster innovation around these topics. Maybe staying with you, Patrick, we know that MiCA is probably one of the most comprehensive sets of regulations across the globe, with many different jurisdictions perhaps having a look at what MiCA is doing or has done. How do you anticipate other regions responding in terms of stablecoin regulation, and what impact would this have from a global operational perspective? We know that, I don't want to jump the gun perhaps or put words in your mouth, but in our working group paper, we did mention that potentially MiCA could set a precedent for other jurisdictions, and maybe getting licensing within getting a MiCA licensing would perhaps enable easier paths to licensing in other jurisdictions. But from your perspective, what do you see? We know that other jurisdictions have mentioned that they're having a look at these things. What's your take?
Yeah, it's an interesting question. So maybe a couple of different thoughts. So first of all, certainly without any doubt, it increases the pressure on other jurisdictions to follow suit and launch their own regulatory frameworks for crypto and stablecoins. There's no doubt about that, because otherwise you will essentially leave a regulatory void that will be exploited by companies that will increasingly turn towards the European Union for their rules and requirements. And that would essentially create some kind of, it's often called a Brussels effect in the Brussels bubble, where those EU rules then suddenly have global implications. So it will definitely accelerate in other jurisdictions the establishment of own frameworks. And I think we can see that in the UK, for example, that is now, I think even today or this week, has launched a clear timeline and next steps for its own stablecoin framework. I think we have seen that in the US as well, where several, high-level stakeholders, including CFTC chairs and others, have said, listen, we have to get our act together now, because the EU has already implemented those rules. And almost ironically, the dollar stablecoin is now regulated at the EU level before it is regulated at the federal US level, right? And that includes obviously USDC issued by Circle, that includes Eurodollar issued by Allan and others. So I think long term, these jurisdictions will act, and they will act fast. The second thought that I wanted to share is that for a globally operating company like Circle is, for example, it is important that as those regulatory frameworks come up, globally speaking, that there is a harmonization layer, and that those rules are globally aligned. Because USDC, to give you one example, is a globally liquid and accessible stablecoin. It's inherently internet native. As such, it cannot be broken down by different jurisdiction. So what we want to make sure is that if the major financial jurisdictions came up with their stablecoin rules, that there is a clear path for a globally operating issuer like Circle to be issuing or distributing that token within those different frameworks and jurisdictions while following one set of standards and principles. And I think the FSB, so the Financial Stability Board, has done a good job of publishing those standards or principles for stablecoin regulation. And now these need to be followed, because one thing that needs to be prevented at all costs, I would say, is a future where a stablecoin that is inherently global would then need to follow different regulatory frameworks and inherently break up the local liquidity into different local pools of reserves, for example. That wouldn't work. It would essentially break the entire model and benefit of having one global liquid token. And so what I personally expect to see happening is, as, let's say, give it another couple of years, and once we have regulatory frameworks in the major jurisdictions, EU, US, UK, Singapore, Hong Kong, Japan, and many, many others, UAE, that we will see also regimes of regulatory recognition and equivalence being considered by those jurisdictions. And just to give you one example where, for example, the UAE or Japan or the UK could say, if a euro stablecoin is issued following MiCA rules in the EU, then we recognize that. We recognize that there are, properly prudentially managed reserve, and you're allowed to distribute that token in our jurisdiction as well. And vice versa, I think that will happen for other currencies and other stablecoins as well.
Yeah, definitely. I mean, if we are looking to have a harmonized, perhaps what you're talking about is a more harmonized set of regulations that do not increase the burden. And I think on any global issuer, and I think it's important that, technologies like this, they open the door to discussions between regulators from different jurisdictions because of the global nature of these technologies. I think it should be seen as an opportunity for each jurisdiction to be able to collaborate on such matters, because it will have an impact on every jurisdiction to some extent. Maybe to Vid now, from a commercial banking perspective, what are some of the risks associated with stablecoin adoption for commercial banks? Is it just, all good and dandy, or are there some thorny bits in terms of adopting your own stablecoin?
Yeah. So one of the risks is definitely disintermediation in terms of payments, at least in some areas. But I think I elaborated on this a bit before. Maybe just to mention another potential future risk is that currently banks are still in the process of building the digital asset infrastructure. So some of them have already started, while the others are just starting. So going back to the roles that I mentioned before, so being the issuer or also the custodian, most of the banks are currently still not ready to enter the market. And we see more and more stablecoin issuers now popping up. I believe that the market will also consolidate in a couple of years, and it might just be that the market establishes a certain stablecoin standard, and it will be really hard then to enter the market with the new stablecoins. So here we might also risk losing a part of this payment pie, let's say. Maybe just to mention it, also a bit more practical risk that we have currently when we're discussing also engaging with stablecoins is the prudential treatment of crypto assets in general for banks. And here I'm talking about BIS guidelines, which haven't been transposed yet to the EU regulation. And this also gives us some uncertainty. How are we supposed to treat stablecoins when we keep them on our balance sheet? If we have to reserve some extra capital for just holding stablecoins on our balance sheet, this would of course make the business case for using these stablecoins much, much harder. And this would, of course, also hinder then the adoption of stablecoins in terms of banks. So here also a call to the European regulators to provide more clarity so that we can also start engaging as soon as possible.
Yeah, I mean, clarity builds confidence by the looks of things. And of course, that's an appeal to the regulator. But also, I just want to come back to you, Vid, with regards to one of your posts on LinkedIn. I think it was last week or so. You mentioned that there's quite a few US investors investing in European fintechs. Can you maybe just give us your thoughts on what made you make that post? What's happening with the competitiveness with regards to European fintechs with this flood of US investment? What are your thoughts on that in terms of these partnerships and acquisitions?
Yeah, I mean, we had this discussion yesterday, and we've seen in the last week, especially some existing stablecoin issuers, so US stablecoin issuers entering European market in terms of acquisitions. Last week, the Paxos acquired Membrane Finance, and also Kraken and Tether invested in Quantos, Dutch stablecoin issuer. And this has, of course, also sparked some discussions, especially in the banking circles. So where is European capital, and why is not European capital that's actually backing these startups? And this reminds me very much of the discussions that we have on the digital euro. So one of the arguments of the ECB for the introduction of the digital euro is, of course, also the reliance on Visa and MasterCard and on their card schemes. And I mean, a couple of years ago, we had a chance to also establish a European card network, and we didn't. And now we are faced with this problem that we're reliant on Visa and MasterCard and trying to solve it now instead of solving it in the past. So I'm just afraid that in a couple of years, we'll come back to the same discussions and say, yeah, there was a real opportunity for European capital to invest, to build a European stablecoin champion, and we didn't do it. And this is not by any means a critique to the startups and to the founders. That I believe they did a great job. And I think if I were in their shoes, I would have done the same. So this is more of a critique to the ambition from the European capital, including the banks here.
Yep. Let's not fall asleep at the wheel again, I guess. You know, maybe something to Allan. You know, having a look at stable coins, right? So pegged to a currency built on a blockchain or some sort of DLT, tokenized, and everything on top of that. So all the stable coins essentially have this architecture. What are you guys as Eurodollar doing to implement, or what are you implementing to differentiate yourself from other stablecoin offerings out there?
So, I mean, I think today you have to look at use cases as being let me back up a little bit, and then let's try and see if we can go a little bit forward. I mean, what you don't want to do is have a big competition in today's market that exists, right? You don't really want to compete hard against USDT in specific types of transactions that happens various places. You don't want to compete too hard against USDC either, or others where they have specific areas that they really are doing very well and have done well for a long time. So you want to try and find your own place where you can do something. So there's sort of a use case place you want to find. And as I think I've mentioned a few times now, where our key use case has been to try and focus on providing liquidity on chain for basically RWA assets or asset managers who wants to tokenize. That has been our sort of, let's call it, claim to fame, and a lot of the basis for that is how you integrate, and that's not just as in here's the token and you buy some and then you use it. It becomes very much how to integrate on a technical basis and on a banking basis with them. So there's quite a substantial amount of technology, as well as, let's call it, instrument and legal instrument designs to make all this happen. So that's how you do it. On the surface, it looks like we're all the same. We're all the same tokens, which is essentially true, and I hope we're all following the MiCA rules. But the way we integrate and work with the different partners, that's really going to be the difference. Our focus is there. Some of the new ones that are coming up have different focus. Some of them are very keen on, I should say, the cross-border payments. Others have many more local ideas. Trade finance, I've seen people focus on very, very dramatically, and others. But that's where you somewhat want to be right now. So you are, let's call it, you're rather than getting into a fight with somebody else, you're trying to grow the overall market, right? You're trying to find new places where basically your stablecoin can be used, a place that wasn't there before. So there is no sort of displacing of another one saying we will be better at that than you, because that's a useless place to be at an infant market. Honestly, you're much better at helping grow the market. So that's why we've focused on finding new applications, and that's the one that we like the most. But I will say it's also hard work. There's no two ways about it. The integrations are quite something. Yeah, that's how I think you do it today. I do believe. I mean, we believe very much in the interchange type idea that some of these MiCA stablecoins will have to go together in some sort of clearinghouse type association, and we're going to have to try and make sure that all of these are interchangeable, given that they follow appropriate rules. Because I think this idea of getting to a certain scale or getting to a place where the system of these different similar coins from a regulatory perspective are in a system, and there's some confidence that you can move in and out of them from a customer. I think that's necessary to get to some level of scale and competing in the overall market. But if you do that, then I also think that the key part to focus on is here, like, okay, I have one, what can I use the technology and the markets what are really good use cases? How can I focus on making my way of integrating this particular thing even better than anybody else that's there? And it's as I said before, 200 billion is nothing compared to how much liquidity is needed and used on a daily basis in the world. So there's so much open space. Basically, there's no reason to be competing head on with anybody else who's substantially bigger than you are. So go somewhere else.
Great. I like the message. Collaboration or rather cooperation rather than competition. I also want to stay with you, Allan, if you don't mind. So a little bit earlier, we asked Vid about the preparedness of commercial banks to really service crypto asset service providers. If you had a message, if you had a wish, is there anything that you would like to see from commercial banks to have better, service those stablecoin issuers within Europe? Maybe even Patrick, if you have a wish that you could push to all the commercial banks within Europe with regards to being better serviced so that you can better comply with MiCA. Over to you guys.
I would have two messages. One thing is the regulation is there. There are a lot of very serious people trying to comply with them and building a serious business. Take advantage of it. It's not a threat. We can persist, we can sit there as well as they can sit there at the same time. We are not like either we build our own stablecoin or you build your stablecoin. That's not how this market is going to work. Take advantage of us. We're being willing to be at the front line. Collaborate with us. Help us with our TradFi, with our banking alliance and so on. And your staff and your people will learn a lot more. And there will be a place where maybe you want to do a stable coin. There'll be other things for your bank because you will learn a lot as we go through this, because of course the technology is not broadly and widely used in any bank. They're often sort of in one particular section of the bank and so on. So take advantage of those innovations or those frontier people that are coming out who seem to be credible, and bring them in and work with them. It's gonna in the end it's gonna be a net positive for you, I believe.
I personally don't have much to add to that. I think with respect to banking access, as alluded to earlier, I think EU regulation is already going quite a long way. And I think banking partners are opening up, banking access is becoming easier. So I'm confident that this, at least for regulated actors, that won't be a huge problem going forward. And as mentioned earlier, I'm also personally very much supporting all the efforts to further open up central bank access that the EU Commission is pushing. If I had to recommend or encourage banks to do one thing, I would probably say that if I look at stablecoin use cases and pilots right now, I feel like that oftentimes this happens in silos. And I feel like oftentimes banks are piloting a certain trade finance project or use case, or a certain cross-border payments use case, but it's something that often is disconnected from the actual market's liquidity and the actual market's users. That's my personal impression, and I would encourage banks to try to, where is there actually demand today? Who is using those stablecoins today? And to question, what can we as banks offer on top of where actual usage is happening today? Maybe move up the stack a little bit and don't issue a stablecoin yourself, but provide, for example, payment services or an aggregation layer or a compliance layer or whatever on top of where usage happens today. Because right now I feel like sometimes it's happening in parallel instead of happening in collaboration and on top of each other.
Interesting. Yeah, so I mean, complement the offering, in other words, right? I know Vid, did you want to come in there perhaps, or was that some food for thought from your end?
No, just, I mean, I can agree with both of the colleagues. So I'm not the Santa Claus, and I cannot promise that your wishes will come true, but your message is definitely being heard, not just by us, but hopefully also by the other banks.
Great. Well, perhaps let's turn to a few questions from the audience. We do have a couple. The first one is towards Vid, and maybe just to everybody as well. What about tokenized deposits? Why would a bank want to issue a stable coin instead of just tokenizing deposits? And are tokenized deposits essentially going to eat stablecoin issuers' lunch for, when it comes to accessing what stablecoins can offer? Is there any differentiation? Because if somebody is banked at the moment, why leave their bank and buy a stablecoin when they could just potentially get something that sounds similar or maybe similar through their bank directly?
Yeah, I think this is a great question, and we've also been discussing this quite a lot. The reality is that currently with stablecoins, we have the regulation, we have the existing issuers, the ecosystem is growing, and we believe that this is a market where we can actually enter right now. On the other side, when it comes to tokenized deposits, we see the big banks are already tokenizing their deposits. So JP Morgan, Citibank, DBS, also UBS, I think was the last announcement. The problem is that they have this scale and they can do that, and they have global exposure, and this is something that makes their use case or even business case profitable from the very beginning. When it comes to smaller banks, and here especially in the EU, the only initiative that I'm aware of is the German initiative of commercial bank money token, and they have done a great deal of research, also some POCs. However, we still believe, or at least I personally believe, that it will take years for such an initiative to come to fruition. So I believe that on the technical side, it might not be that complex because we're using similar technology. But on the other side, when it comes to regulatory, tax treatment, but also at the end of the day, the settlement of these tokenized deposits, you need a bigger ecosystem and you need more banks to join. And at the end of the day, you also need to settle these transactions. So here, the wholesale CBDC would also be one of the potential options. But as already mentioned, these things are not yet there. Whereas on the other side, with stablecoins, we have the regulation, we have the existing issuers, we have the ecosystem growing. So I think that for the banks now, it's just the question, do we want to be part of this right now? Or do we want to wait and continue doing our traditional business as we've done it for the last couple of years? So, and at the end of the day, I also do believe that tokenized deposits will come, but it will still take quite some years for this to come. And at the end of the day, they will coexist with stablecoins.
Okay, Patrick.
Yes, so I don't.
Sorry, can I just be a little bit antagonistic?
Sure.
Before you answer. So what I hear Vid saying is that stable coins are just a stepping stone to tokenized deposits.
I mean, they will both coexist at the end
Thanks
of the day. I think.
for the additional spice, Konrad. No, I mean, I think tokenized deposits will play a role. I just don't think it will be exactly the same role that stablecoins or e-money tokens play today. If I look at stablecoins today, I rather see them as essentially open internet protocols for money, which are accessible by anyone, globally interoperable. Anyone can use them and build their apps on top of them, right? Nobody needs to ask Circle for permission to build a app based on USDC or EURC. Those are open networks and protocols that anyone can benefit from and build on top of. And I think that's just something that tokenized deposits cannot deliver for both regulatory reasons and also structural reasons. I mean, tokenized deposits are inherently linked to their intra-bank, essentially a barrier, right? I couldn't imagine that a tokenized deposit is just openly free-flowing across borders and across banks. So it will be inherently limited for regulatory reasons to a certain intra-bank network or interbank network, and also for structural reasons. Because if you think about how structurally an instrument, an e-money token differs from a deposit, an e-money token is 100+% reserved, right? There is no leverage, there is no rehypothecation happening here. Whereas for a deposit, those are funds that are highly leveraged, where the majority of the money is actually rehypothecated in loans, and only a small minority of the token's reserves are actually held by the banks. And I just don't think that structurally that kind of asset that is not 100% fully backed can open up that global access, because in that global ecosystem, if you think about those protocols for money, what they will deliver is a way higher velocity of money, where those tokens change hands way quicker than they did in the past. And therefore, any kind of risk that it is added to the structure of that asset will be inherently limiting. I don't think that anyone, for example, would want to use a deposit token from Credit Suisse or Silicon Valley Bank in certain instances, right? These are inherently, I would say, structurally different assets. So I think they will play a role. It's just not the same one.
Yeah, so essentially you're saying that stable coins are birthed, with a certain ethos that tokenized deposits won't be able to easily be integrate in terms of their global access, their global nature, their the applications that are built on them already, etc., etc.
I think
Great.
if I may add to it,
Sure.
can I add to it, or do we have no
Yeah,
time?
sure. No, we've got time. Go for it.
Okay. So I think this is I think we need to. So the stable coin should ultimately become like a very strong, clear, independent settlement piece, right? So basically, when there's a transaction, you go from, I have one good, you have another good, we exchange in this format with this stable coin, because it should be, as Patrick just said, it should be, over collateralized. There should be, it's 100+%. There's a certain amount of cash in multiple banks. There's a certain amount of HQLA or money market funds and so on in a certain banks, and maybe even something with the central bank, right? It becomes a very crystal clear settlement currency that people can use for that sort of like, okay, now I'm going to do a transaction. We're going to have to, because I'm not going to send you, this ball for this. We need to do it in a payment way, so we're going to exchange this. So I do believe that that's a clear role for the stablecoin, even in and it can be safer, that the solvency can be higher and so on, but that's going to be its role for sure. Now, the question is, because if people can move so fast in and out, how much of their currency or fortune should be sitting in that particular settlement currency? We know for a fact it's crystal clear. One is one. $1 is $1, €1 is €1. It's like statutory requirement and so on. But we also know now we can move really fast out of it and into it, right? Because that's how on-chain should work. I should be able to get into it and out of it really fast. So when I'm not in it, should I be sitting in a money market fund? Should I be sitting in a tokenized deposit from Standard Chartered or whatever? Because as I'm not making a transaction with you, I should really be earning some interest. And there's definitely no interest in the settlement currency, right? Because it is one. That is a golden rule. So the interesting part, and I don't know where it's going to play out, I think the stablecoin requirements and MiCA and so on be harder and harder on making it a settlement piece. It isn't like one is one. Are we going to make the damnedest to make sure that who's funding it and where assets are is going to be not dependent on the credit of this and that, but very much one is one. And it's going to be interesting to see if this will mean that the amount of money, because of this fast moving in and out, the total liquidity pool will be less in stable coins if we take a very global perspective, because people will be so easy to move into something that is yield bearing as in a money market fund, and that's a risk you're willing to take. It's not an outrageous one, but the stablecoin role is very clear in terms of it's needed for this final settlement, and you don't really need to own it for more than 10 seconds when the transaction happens. What should you be in before? Should you be in that, or I don't know where the market goes, but I'm just saying if it's so easy to go in and out of these different tokens, well, I mean, I can tell you, I would probably put my money in today a money market fund or a US Treasury backed thing, and move quickly in when I wanted to buy something, or buy ETH or buy groceries, let's say. But I think that's an interesting to see how the dimensions are going to change between these things. I mean, yeah, that's just a commentary on where does it go in the end.
Interesting. Thanks for fleshing that out, because I think a lot of people have been thinking about that. Vid, you seem like you wanted to say something?
Yeah, I mean, great discussion here, and I can totally agree with the other colleagues. Maybe just one word on this flexibility of stablecoins. That is something that is way better than with the tokenized deposits. I think that what stablecoin issuers are now betting on, and rightfully, are these new use cases. And here in the banks, I think a lot of banks are still thinking in the old terms. So what are the use cases? Cross-border payments. So we're looking at the use cases through the prism of the how the payments are done today, and we are missing out the piece what else can develop. What are the use cases that maybe we're not aware of, but that will still develop in the future? So I think it's very important here also from the banking side to start thinking in this direction. What can happen? What use cases can develop if we have such means of payment, such as a stablecoin?
Great. Well, we've got about 10 minutes left. I would just want to ask you, gentlemen, to please maybe answer these next few questions like really quickly. So we've got a question that says, why do most MiCA compliant stablecoins only provide minting access to businesses? Only the bare legal minimum is offered to retail users with redemptions as well. Circle Mint access to large volume retail traders would be awesome. Not sure if that makes sense, but could we get an answer to that question really quickly?
I mean, very quickly, I think it's just a business decision that those companies have to take. We at Circle, we took the decision that our distribution is primarily wholesale. And so we're interfacing directly with businesses, institutional customers, etc., providing them with the liquidity they need. And there on their end are experts, or like could be experts on the retail segment. They could be exchanges or brokers or OTC markets, etc. And we just want to focus on our strength, which is the governance, the reserve setup, the minting setup, the compliance setup, etc., and want to build that neutral market infrastructure for both USDC and ERC without necessarily competing with potentially our partners on the retail distribution side of things. So that's why we at Circle, and I think many stablecoin issuers outside, are taking the decision to limit the distribution B2B, while of course complying and covering all the obligations on the regulatory front with respect to redemptions, for example.
Okay, great. So there's a question here as well. This increase in the number of euro stablecoins could lead to fragmentation of the euro stablecoin market. Are small euro stablecoins expecting more takeovers or acquisitions? It's anyone's guess, I guess.
No, go ahead, Allan.
I think the European banking market is fragmented. The European banking market is local on many regards. I think you should expect to see there will be local, stable coins all over Europe, very likely, and they'll have to collaborate in some way or shape to have scale, basically. But I think this, one to rule them all, or three to rule them all, whatever, is going to be hard. It's just the nature of things. I have not seen any other acquisitions or other things going, but I do see a lot of people going through the application process and so on in various jurisdictions where you can see them sort of pop up. I don't necessarily see the fragmentation problem as long as collaboration is done in the right way, because I do believe there's so many use cases, and some of the use cases are unfortunately also local. I mean, even though we have a separate payment system, there are actually local payment systems in all of the different countries as well on top of that. So there's plenty of use cases to just dig into, even if you say I'm going to be focusing on this region or whatever. So I would not worry about fragmentation at this point.
Yeah, the only thing that I would add is that this is an entirely new market that is forming right now, with MiCA entering into application. And so I think it's not surprising to see a huge wave of new entrants, be it banks, be it new startups, be it consortia, be it other. And I think we can expect that to continue over the next at least 12 months or so, to expect many more banks, institutions, etc., startups launching their euro stablecoins. Ultimately, further down the road, though, and I made that prediction also at ECC this summer already in Brussels, the stablecoin business model is very much reliant on size and network effects today. So I do think that we will see consolidation over time, and those stablecoins, euro stablecoins, for example, that have established, managed to build those liquidity modes, network effects, distribution modes, that those will be able to rally the liquidity around their stablecoins. And so I think further down the line, I wouldn't be surprised to see increased M&A and potentially also like some of the smaller players like probably giving up. It's like a natural progression of the market.
Okay. Very interesting. And you kind of preempted my next question, Patrick. In fact, I was going to ask, just as a final question to everybody, and thanks for giving yours already. What do you see in the next 5 years for stablecoins within Europe? Maybe let's start with Vid and then move to Allan. Patrick has done so already.
Yeah. So as Patrick already mentioned, I think that now many more issuers will start to pop up. We will have many more new European stablecoins, and then the market will also consolidate at one point. Where I also see that the market will go is we will have more stablecoins, but definitely this will also be limited either on certain use cases, serving certain use cases here. And from the banking perspective, I also see that at least certain payment flows will be abstracted, in terms that we will not even know, or the consumer, the user will not even know that there are stable coins going in the background. So I think this is something that is very important, because there was a question also on the fragmentation. I think for at least certain use cases, we will not even know what is going on behind, but we will, of course, get the efficiency gains from, let's say, using stablecoins for cross-border payments. So I think MiCA started this wave, and I think that, yeah, there's a bright future for European stablecoins.
Great. That's an optimistic take, Allan.
So I think a lot of it's going to be driven by where MiCA is going to take it. You know, if it takes a wrong step along the way, we may, you know, lose some steam. But given it continues to improve and hopefully open up some of the restrictions, move other restrictions, I'm very positive for the stablecoin industry. I think it's the new way for payment rails and clearing rails and so on. So I think there's a lot of improvements that can be made sort of very broadly in that. Now, the interesting part, over the next 5 years, I do agree that there's a lot of stable coins that probably will be sent out here in Europe. I'm not sure I agree with the consolidation. I agree a number of them will have crabby business models, so they will fail. I mean, just like any other entrepreneurial venture, you've got a crappy business, you will fail. It's just how it works. So I agree with that. Now, whether it'll consolidate into fewer, bigger, I'm not sure. The European environment has not really been one where things consolidate into substantially bigger, or there are bigger things, but even though they are bigger, they're not really that big. And even so, there's very large things in the various countries. The local Spanish banks, the local German banks, the local Italian banks are quite. I do not foresee this sort of major consolidation across Europe, because I just don't think that's in the nature of how the European financial market has generally acted out. Crabby things will disappear and be weeded out over the next 5 years. There'll be some stability, as perhaps as in there'll be some local providers who's focusing on the German market potentially, or whatever different markets, but there'll be a good number of them. And as you know, I'm hopeful that they'll, be mindful of the fact that what Patrick says, that there is a scale and size component in here, and they're going to have to collaborate to get the scale and size component for liquidity and other things. They do need to collaborate on that. But that being said, given that you collaborate on that, you can address a Hungarian specific model, or you can address a specific French model, or whatever there is there. That's to be done. And that I more believe in. I believe in clearinghouses, just like there were in the US and other places, how they handled local banks and so on over the next 5 years. I just don't see the big scale consolidation in Europe. I just never seen it. I just really don't know.
Great.
Right.
Well, with that said, and thank you for your insights, we've reached the end of our discussion. It was very illuminating, very informative to hear from you experts in the field, and to hear what's going on behind the scenes, and also to maybe have a look into the crystal ball about where you feel the market is going to. And thank you all for your insights today. Feel free to follow our experts. That's I'm now speaking, of course, to our audience. Feel free to follow Vid, Allan, and Patrick on their various social media channels, primarily LinkedIn, I would assume. Some also write some very interesting blogs, so please follow their initiatives. And feel free to also follow the Digital Euro Association on LinkedIn, X, and YouTube, where we will continue to bring you more insightful discussions. And with that said, I'd like to bring our panel discussion this afternoon to a close. And thank you.